Hi there, my name's Gordon Farragher. This recording looks at the VAT implications of being a partially exempt supplier. Hopefully, if you're watching this, you already know a little bit about VAT. So let me remind you of some of the key things. If you are a trader, you're VAT registered and you make taxable supplies, by taxable I mean everything you sell is either standard or zero rated. Both count as taxable, or even reduced rated. You don't get many of those. If everything you sell is taxable, then whenever you incur expenses and you incur input VAT on those expenses, your input VAT will be fully recoverable. If, on the other hand, you make wholly exempt supplies, things like insurance, finance, things like that, well, if your supplies are all exempt, then you won't register, because one of the conditions for VAT registration is you must be making some taxable supplies. Where the complication comes in is if you have a mixture of things that you sell. Some of them are taxable, some are exempt. And the basic idea is you've got to look at your inputs, your expenses. Any input VAT relating to your taxable supplies you can recover. Anything relating to your exempt supplies you can't. However, in practice, it's not always easy to look at your costs and say, oh, well, yeah, I incur that because of my taxable supplies, or I incur that because of my exempt supplies. A lot of your costs will just be overheads relating to your business generally, and for those you are going to have to do some sort of a split, some sort of apportionment. Now, you can agree any method with the revenue that you choose, but the standard approach is splitting based on turnover. So under the standard approach, you take your taxable turnover divided by your total turnover. If you're a relatively small trader, you round to the nearest whole percent upwards. For larger traders, you round to 2 decimal places. It's a little bit detailed, but there we go. Thought I'd share that anyway. You then have a look and you see how much VAT you can recover and how much is irrecoverable. However, there is a potentially important de minimis provision that says if the apparently irrecoverable VAT is only small, then the revenue don't want to mess around with it, and so they let you recover all of it anyway. So how do they define small? Well, you have to satisfy 2 separate tests. It's got to be less than £625 per month on average, and it's got to be less than half of your total input VAT. And if you qualify under that, then you can have all of your input VAT back. Easiest to show by means of a simple example. We have our VAT registered taxpayer Zoe, who is doing a standard quarterly VAT return. Most of her sales are standard rated, but some of her sales are exempt. She's had a look at her costs, and she can identify that some of her costs are directly attributable to her standard rated sales, and the VAT on those costs is £6,000. Some of her input VAT, she can see, is on items directly attributable to her exempt sales, and the input VAT on those is £1,000, but she also has some unattributable, unallocated, we sometimes call it residual input VAT, £2,500, and there is also the VAT on the purchase of a car. And one of the things that hopefully you can remember is that input VAT suffered on the purchase of a car is not recoverable unless the car is for 100% business use, which is incredibly unusual, and it's not here. So how do we go about working out the amount of input VAT that is recoverable? Well, we have a look at what proportion of our sales are taxable, and we can see that that's 81%. So when we look at the unallocated, the residual input VAT, 19% will therefore be irrecoverable on the face of it. So the irrecoverable VAT is that 19% of the non-attributable plus the £1,000 that we directly attributed to our exempt sales. So on the face of it, we've got 1475 of irrecoverable input VAT. That ignoring the car, because the input VAT on the car is definitely irrecoverable no matter what. This 1475 may end up being recoverable if it's small. And that's what we need to look at now. What's small? Well, just to remind you, less than $6.25 a month on average, and no more than half of the total input VAT. Well, we're doing this VAT return for a quarter. 1475 in a quarter means 492 per month on average, therefore tick, less than $6.25 a month. Is it under 50% of the total input VAT? Well, the total input VAT was 9,500. Half of that is 4,750. We're looking at 1475. So, yep, tick, less than 50%. Therefore, all of that 1475 apparently irrecoverable VAT is actually recoverable. However, the VAT relating to the car, definitely no good.